Let's take a look at the global market highlights and news for March 25th, 2014. NASDAQ and tech stocks plummet. Netflix pressured by Apple, and gold continues to tumble. Let's take a quick look at what is happening in the global markets now. PMI data was the focus of Asian and European trading. China's factories continued their dramatic slowdown in March, with manufacturing activity falling to an 8-month low amid a slump in the world's second-largest economy. HSBC said that its flash measure of sentiment among manufacturing purchasing managers fell to 48.1 in March. Analysts had expected the index to rebound from its final reading of 48.5 in February. Eurozone individual and composite PMIs were also disappointing, with France being the only bright spot. Even Germany missed the target. The Nasdaq, which has been the best performing market index of the year, fell nearly 2% yesterday. The Dow and S&P 500 were also down, but not nearly as much. Netflix was under the most pressure Monday. The stock was down nearly 9% and lost the most in the Tech 30. It appears that Netflix investors are worried about the possibility of competition from Apple. Investors are preparing for a rush of initial public offerings this week. The company behind the popular Candy Crush Saga online game is one of 14 companies set to go public this week. The IPO mania is part of a longer-term global trend that has seen many companies make their public debut. Wall Street was relatively firm on the first day of the trading week. There's little economic or corporate news on the docket Monday that could influence market sentiment. European stock markets closed mostly lower as the Russian takeover of Ukraine's Crimean Peninsula continues to dominate sentiment. Asian markets ended with some significant gains, though, despite HSBC data that showed Chinese manufacturing activity fell in an 8-month low in March. The Hang Seng in Hong Kong shot up by 1.9%, and the Shanghai Composite rose by 0.9%. In the foreign exchange market, San Francisco Federal Reserve President John Williams, in an interview with the Washington Post, said there was no suggestion from the Federal Reserve last week that the central bank will put the trigger to hike interest rates sooner than previously believed. The euro erased losses versus the dollar and rose against the majority of its most traded peers. The euro was trading at 1.3838. Sterling touched its lowest in more than 5 weeks against the dollar on Monday, continuing a recent slide as expectations of monetary tightening by the Bank of England have pushed further into the future. The pound was down 0.1% at 1.6474. The dollar last traded down 0.02% against the Japanese yen at 102.23. Declines in U.S. stocks on Monday pushed up demand for the yen as a safe haven currency. In the commodity space, gold fell to its lowest level in 5 weeks. Gold fell $24.80 or 1.9% to settle at $1311.20. Some of the retreat could be seen in gold-backed exchange-traded fund holdings, said Ole Hazen, head of commodity strategy with Saxo Bank. Total gold inventories held by ETFs fell by 0.2 metric tons during the week ended March 21st to 1766.2 metric tons, the first decline in 4 weeks. Gold prices have also faced pressure from worries that the U.S. Federal Reserve could raise interest rates sooner than previously thought. Fed Chairwoman Janet Yellen last week said that the central bank could raise rates as soon as 6 months after ending its bond purchasing program. Oil prices paired early gains and were trading relatively flat after rising above $100 a barrel in morning trading. Traders were on edge after an oil spill in Texas closed a major shopping channel, and global tensions continued over the crisis between Russia and Ukraine. Benchmark crude oil was up 5 cents to 99.50. Earlier prices rose as high as 100.34 a barrel. This is Amy Anderson from Option Rally signing off. Follow me on Facebook. And of course, I'm waiting for your like below if you enjoyed today's Market Watch. Have a great week.